Business news time now with Stephen Carroll. Hello there, Stephen.
Hi, Catherine.
You're starting us off today with the latest results from a very well-known French company, the car maker Peugeot.
The PSA Group, which owns Peugeot and Citroën, saw its profits almost double last year to 1.7 billion euros. The company's earnings boosted by cost-cutting, price rises and increased sales. PSA will pay shareholders a dividend for the first time in 7 years. It's an impressive turnaround for the car maker, which in 2014 needed a government cash injection and investment from the Chinese firm Dongfang. The car maker is in talks to buy its rival Opel now from General Motors. It's hoping to secure a deal in the coming weeks, and Chief Executive Carlos Tavares has been trying to reassure the German and British governments that jobs at GM-owned factories will be safe. Alexander Hurst has more.
Inching closer to a deal. PSA's acquisition of General Motors' European arm could happen in a matter of weeks. After nearly doubling profits last year to 1.7 billion euros, the company has the cash to pursue Opel and Vauxhall.
We were able, over the last 3 years, to accumulate no less than 8 billion euros in positive free cash flow. And you see also that we could turn around our company, moving from a minus 2.8% up to 6% of operating profit margin.
The deal would make PSA Europe's second largest car maker and could allow the company to save up to 2 billion euros a year, a necessity if it wants to turn around General Motors' European division, which has lost 14 billion euros since 2000. Yet analysts warn that some of the savings might come from reductions in Opel and Vauxhall's 38,000-person workforce. Experts say the group could cut up to 6,000 jobs, most of them in the UK and Germany. In meetings with Theresa May and Angela Merkel, CEO Carlos Tavares has given assurances that PSA will honor existing job guarantees. The French government, which owns 14% of PSA, supports the takeover, but also expects jobs to be maintained.
Well, how's that news going down on the markets then?
Peugeot shares opening up around 1% in trading in Paris today. There are lots of companies' results around which are moving the markets. We've got small falls in London, Paris and Frankfurt trading around the flat line. One share I picked out for you is the UK bank Barclays. They're up over 2% after their latest results. Over in Asia, shares slipping in trading there after the Federal Reserve minutes hinted that a interest rate rise could come fairly soon. Investors have been banking on a rate rise in June, but these minutes seem to suggest it could come sooner, as early as March. Low interest rates have been fueling a stock market rally around the world. You can see why investors might be worried about that. We move on now, look at some more of the day's business headlines. The French telecoms firm Orange says that plans are on track to launch a bank in France in the first half of this year. It's partnering with the insurance firm Groupama for the venture. Will be able to use its 3,000 branches around France. This comes as Orange reported a return to revenue growth in 2016 and a small rise in pre-tax profits to almost 12.7 billion euros. Carlos Ghosn stepped down as CEO of Nissan. He'll stay on as chairman of the Japanese brand, though, as well as CEO of Renault, but will focus now on building a new alliance with Mitsubishi Motors. Renault Nissan bought a 34% stake in Mitsubishi after it admitted it had cheated fuel economy data in its cars. And profits at the Australian airline Qantas fell by 7.5% in the last 6 months. Revenues fell too because of lower fares and increased competition the carrier is facing. Qantas has slashed costs and jobs in recent years in an effort to turn around its fortunes. Investors are optimistic, though. Shares rose by more than 5% in Sydney.
Right, one final business news story now. Do you ever get the feeling that you're paying a little bit too much tax? I think it's something many people feel. Apparently, though, Stephen, in Sweden, it's actually official. People are paying too much tax.
And that's despite having one of the highest tax rates in the world. The Swedish government says that it had a budget surplus of almost 9 billion euros last year, with almost half of that due to tax overpayments. It'll now have to pay back more than 4 billion euros to companies and individuals who paid too much tax on purpose. Now, this is a problem created by negative interest rates. The benchmark interest rate in Sweden is minus 0.5%. That means that savers are getting practically nothing for keeping their money in the bank. But Swedish tax rules mean that those who pay too much to the government will earn a minimum of 0.5% in interest. So as a result, people are using essentially the tax office as a bank and putting the money there rather than in their regular bank accounts.
Sneaky, smart, well done Swedish people. That's all I can say. Thanks very much. Stephen Carroll, our business editor there.